Hey everybody, it's Bob here at Trade Genius. Got my good friend Phil here. We always talk about what are going to be good market hedges, if we go into a recession. But what if we have a recession and interest rates are rising? How do we hedge that? Well, we're going to show you how. Stay tuned.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. Okay, Phil, I think it's pretty easy. Fed starts cutting interest rates, markets going into recession, stock market's falling, you buy TLT, right? But what if we get in a situation where they can't lower interest rates and the 10-year yield and the 30-year yield start to rise and the market starts to sell off? Where are we supposed to put our money? Well, I have good news for us. If you throw up this first chart if you guys have been listening to us for a while, we've been telling you, energy loves higher interest rates. So there's a guy on Twitter, Warren Pease, Pies. This is his research firm. So these two slides I'm going to show you come from him. So I want to make sure he gets the credit for it. But he just has a great way of packaging this information. He's a great follower on Twitter. If you want to follow somebody who doesn't hype and can help you make money, he'd be the guy. But anyway, he put a note out there called Energy is the New Bonds. And essentially is that, look, big money only has so many places to go. And if interest rates are going to rise because basically the central banks around the world can't get inflation under control, you want to own energy. This is very 1970-ish, Phil. And I want to show this next chart because that's really the money shot anyway. Is that here he looked at every sector, and these are correlations between interest rate movement and stock price action. And if you notice, there's 11 sectors here that he's going through, and 11 out of the 12 of them correlate very poorly to higher interest rates, except for one, is energy. And we could see it. If you just put a chart of the TNX up every day, and if the TNX is rising, I can almost guarantee you that oil is going to be up that day. So how do you play it? You can take a position in USO, which is probably the safest one, or XOM, or OXY, OXY, or CNQ, Canadian National, Chevron. You want the big multinationals. I prefer to stay in this side of the hemisphere and north of the equator, if you know what I mean. Oil industry in Mexico shot. Brazil's going total communist, so who knows? They're going to probably ruin their oil sector like Venezuela here soon enough. But United States offers you great opportunities. And if you notice, Phil, ExxonMobil since the beginning of March has been pushing up. It's probably up now about 16% in 1 month, which is a pretty big move, all because, Janet Yellen can't keep doing these treasuries anymore. So it's a big problem. And so with a beautiful solution. So if you like to run pair trades, or you like to make sure you have a hedge portfolio, when you start shorting the market, if interest rates are going up, you want to have energy. Interest rates are going down, you want to be in TLT. I mean, it doesn't get any simpler than that. You don't have to complicate your world. You have any thoughts on this, Phil?
Yeah, I love that because, you assume that the bonds are going to get bid up. But, the cycle has been so different on a lot of different levels that I think it's good to have a plan B. So I think that's an eloquent solution. And I think that you're covered, if you get the bonds that are getting bid, yields are dropping, then it's kind of the standard fair recession. But like you said, if not, and the interest rates are stuck, then here you go. And you're covered either way. It's just a matter of recognizing what scenario we're going into. So great idea. Love it.
Yeah, and we talked last week about steepeners. This is one way you protect yourself with the steepeners. Anyway, guys, I don't want to ramble on. This is easy. Start doing your homework. They've already run quite a bit. So, I'm hoping for a pullback and then maybe pull back a third of this move or a quarter of this move. And then I think we're going to go much higher. I think interest rates are going to fool us. And Phil, real quick, give 30 30 seconds, you said 4.5% seems to be an area that the market doesn't like higher on the 10-year.
Yeah, if you look at the charts where we go into the 4.3 to 4.5% on the yields, the 10-year yields, and you notice the market does not like to go up in that environment. Bonds and the equities are correlated, so that means bonds are getting sold even harder than equities. But that yield, you got to watch that. You can just chart it on TradingView, 10-year yield, and you'll see when we get and we're there now, right? We're starting to push up into that level, and anything north of 4.5%, I think it's going to be very difficult for equities to push up into. So maybe we do get that scenario where we do have that presidential election year, that fourth election year, where it's, I believe, chops through chops through April, which is, we're working through now. And then into May, we start to get out of that chop and resume the trend. So that could be coinciding with a spike in yields. We'll just have to monitor that. But that is something to keep an eye on. Just keep that chart up and watch. If we start dropping back down towards 4%, it's probably going to give equities a break.
Interesting. And the market is anticipating a May rate cut. So that would be wild, Phil, if that all dovetails together. Yeah. With you guys, hey, catch you guys tomorrow. Check us out, tradelikeagenius.com. We've been big into energy. We've made a lot of money in energy this year. I don't think the party's over quite yet. And you can join us. There's specials running, tradelikeagenius.com. Thanks, Phil. We'll see you guys tomorrow.
Trade Genius.